Hello, hello. Welcome to the All In podcast with Nate Pale. Of course, I am your host, Nate Pale. Today, my guest is Brian Adams with Excelsior Capital. I should have asked you how to pronounce that. I'm probably
It's
butchering
okay. Excelsior, it's called Excelsior. It is the state motto of New York, where I'm from originally. It means ever upward in
very
Latin.
cool. Thank you for clarifying the pronunciation. So,
Sure.
Brian is a recovering attorney hailing from a family office background dedicated to providing investors with direct access to institutional alternative investments that can generate passive income in a tax efficient manner. He pulls on his extensive expertise in legal, private equity, and real estate industries to provide a broad market view of the entire alternative investment landscape to deliver strategic and reliable investment opportunities to his partners. Brian currently serves as the principal for I'm butchered again, Excelsior. Get it?
Excelsior.
Excelsior
Yeah.
Capital, in which he founded in 2019 and oversees acquisitions, operations, and capital raising efforts. In addition, he frequently participates in speaking engagements focused on providing the real estate investment community with a real and honest outlook of the commercial real estate market so intelligent investment decisions can be made. Welcome to the show, Brian. How are you?
I'm doing well. Thank you for having me.
Thanks for coming on. Apologize on the pronunciation. Usually, I try to ask like, "Hey, what are the hard words I'm going to have trouble with?" and get that figured out. But
It's all good.
so it seems to be a reoccurring theme, and maybe it's the lawyers, and maybe it's New York. But I've had a lot of guests on my show that are former attorneys, and they've decided to pivot and take their profession a different direction. So, how did you start off with going through, hey, I want to be an attorney, and then making a pivot into real estate investment?
Yeah. So I think, like a lot of people in my socioeconomic group, we all kind of rebel against our fathers and then eventually want to become our fathers. My father's an attorney, my grandfather's an attorney. They've both been very successful. But honestly, law school was really a choice I made because I was unimaginative and lacked creativity. And it was kind of a place to go where I could kill some time to figure out what I wanted to do ultimately with my life, which unfortunately was 3 long years and quite a lot of money to do that. I would not recommend for anybody else, but there's a lot of power in knowing what you don't want to do ultimately. That being said, when I practiced for the majority of my short career, I was a prosecutor in the district attorney's office here in Nashville, Davidson County. And I really liked that job. I like trying cases. I like being in the courtroom. It's very much different than, say, doing a corporate law gig. But that's the type of job that you either work for 5 years or 50 years. And I knew I was not a lifer. And so after a few years of working through that, that was also right after the Great Recession. So it was kind of a good place to just stay put for a while. I started aspiring to be a corporate lawyer. I talked to a lot of people who were in their 50s and their 60s, partners at these firms, et cetera. And the recurring theme was something along the lines of kind of the gilded cage, where these people who, from the outside looking in, had been successful, but they were all pretty miserable. They all worked a lot. And once I understood the business model of how law firms work, which is the value you create for the enterprise is really correlated to how much time you spend on something, not how the product eventually works. I just thought that was a flawed business model. And I never really wanted to have my life's work be summed up in a diary where everything was tracked to the 10th of an hour. So I started exploring other opportunities, and that's how I got into the commercial real estate game.
Yeah, I always like imagined that like if you're tracking your time to the 10th of an hour, like how much time are you like billing, just tracking time and billing? Like it's almost like it's repetitive. It's interesting to see how that goes. And that is a really unique perspective of going from like criminal law to real estate investment, because I think a lot of people go like, hey, I'm in, you do need attorneys if you're doing real estate investment, you're tying up deals. There's a lot of complex paperwork, there's complex moving parts of like who the seller is and who the buyer is, and those might not always be like one to one. You might be going through a couple different entities to get where you're ended up going, and a lot of people get their experience in real estate investment as being an attorney for these deals, and then they realizing like, hey, like you said, I can provide more value to the project, not by the hours I bill and the money I charge people, but bringing value to the project and figuring out the best and optimal use of a piece of property, and trying to make some value enhancements. So how do you work with your current clients in their real estate investment? Are you working as an advisor, or are you actually an active participant in the investment?
Yeah, so we're in the industry, we're a sponsor general partner, right? So we're finding and sourcing the opportunity. We are running the deal, we are managing the asset, and we're raising the capital and quarterbacking everything from day one. So we are a soup to nuts operator, sponsor, and we also raise capital from a network of individuals and families that we know.
Okay. And are you what vehicle are you investing in? Like, are you doing multifamily investments, commercial real estate,
Yeah,
retail?
we're largely commercial. So the vast majority of our portfolio, it's roughly 2.5 million square feet, is suburban office. We do have some other things. We have a little bit of industrial flex. We have a little bit of retail. We started to look at some triple net opportunities in the early childhood care center space, but the vast majority of it is office.
Okay. Well, you're in a probably very touchy subject right now. Like, clearly we're in COVID pandemics, right in the thick of it. Office spaces have definitely been challenged, and people aren't going to the office. People aren't sure if they're going to be going back to the office. Where do you see, like, okay, let's stop a little bit before I ask that question. Where is the market at right now for commercial real estate? And where do you see that going over the next year to 5 years out? How do you envision people are going to be working in the future?
Yeah, so I'll rein this in a little bit, and I'll comment about what I think office will do and won't do, because commercial is a broad spectrum. So it's a good question. I think it's a fair question. The way I'll answer it is what I've seen in the market, and we're pretty active. We acquired a property in June, and knock on wood, we're trying to close another deal next week. And so we started to see deal flow pick up after Labor Day, call it. And to be honest with you, we look at things on a cap rate basis, which is like EBITDA. You can compare apples to apples, basically pricing based on how much cash flow a property throws off. Honestly, we've seen pricing get more competitive since COVID. So if it's a well-located office building with good tenants, no near-term roll, and it's a good cash flow type of opportunity, it's more expensive to buy it today than it was pre-COVID.
Mm,
And so we can talk about the work from home, future of office if you want, but just in terms of an asset class as an investment vehicle, it's still one of the best risk adjusted returns that you can get out there when you look at the public market hitting all-time highs, which clearly is just a steep disconnect with the real economy. And you look at fixed income in the bond market, which is pathetic, and even corporate credit, which is really pretty stretched in my opinion. If you're looking for cash flow, real income, I think commercial is still probably your best risk adjusted return out there in the marketplace.
okay. Somebody that's getting started in real estate investing, you talk about like there's commercial real estate's pretty broad. Office space is one niche. There's single family that moves into multifamily. Like, where should somebody, if they're looking to say, hey, look, I want to diversify my investments, or I want to start investing in real estate, where should I start looking at? And is office space, commercial real estate one of the first places I should look, or should I be graduating into that?
Yeah, so I think it's about your risk adjusted return profile, right? So if you are really risk averse and you're risk off and you just want to have some kind of exposure to the space without incurring any potential loss or etc., you can look at something like Class A industrial, right? Distribution centers that are leased to Amazon and Microsoft and etc. You can look at cold storage, you can look at self storage, but the problem is those yields, the real income that's going to be produced off of them, are going to be probably in that 2 to 3% range. It's very much an institutional world. Now, if you go to
Mhm.
the other end of the spectrum and you really want to go risk on, you want to see if you can make some real money, you can buy some hotels at some steep discounts. Same for retail. Now, that return is going to be commensurate with the risk you're taking. If you want to go somewhere in the middle, that's where office, some triple net product, and multifamily probably makes a little bit more sense. You can still get a nice hefty yield, but you're not taking the extreme amount of risk that's out there. So that's kind of how I would think about it: is what are you solving for? Are you trying to get a 10% cash on cash yield and a 3x multiple? Well, you're gonna have to go out on the risk spectrum. If you just want a very safe play and you're okay with a 2% cash on cash yield and a very de minimis multiple, well, then that product type is out there as well. And so I think it's more going to be a reflection on what you're trying to achieve by investing in the space.
Okay. And if I was looking to get started in real estate investment, how much money am I looking to start off with an investment? And am I able to get in and maybe like a syndicate or part of a fund for 10 grand? I mean, and I'm obviously excluding like just straight up investing in a REIT off of the stock market, but like saying, hey, I want to get some skin in the game. I want to, own a piece of a building that I can go and see and like, hey, that's a piece of property I own. Like, what are we looking at for, getting some skin in the game and making our first deal?
Yeah, huge variability in our world, right? So ourselves as a sponsor, we only work with accredited investors. So our minimums are going to be higher than other folks who work with non-accredited investors, for instance. But I would say from an allocation perspective, I'm not your financial advisor. I'm not a CFP, but I would think something where along the lines of a 5 to 10% allocation, and I would spread that across multiple opportunities. I would not go all in on one deal. This is a way for you to learn about the space, to try it on, and see what is the right fit for you. So out of that 5 or 10%, I would try to split it up into 10 different deals. And you're going to have to do some work to get with sponsors like me, understand my minimums, and then match up your allocation with timing on when a deal comes out. But I would suggest not going into funds because they're going to be very opaque. They're going to be slow moving, and you're not going to learn as quickly as doing a one-off deal, in my opinion. So I would try to split it up and do, a few a quarter if you're allowed to in terms of your allocation amount. And I would really try to not pick the winners. I'd be pretty disciplined about saying, okay, well, I'm going to start with multifamily. I'm going to start with office and self-storage because those are food groups or asset classes that I understand, that I live in an apartment building. I work in an office. I own a self-storage unit or, at least one. Because that's tangible, right? And you can understand kind of, okay, location, what the risk profile looks like, what the underwriting looks like. It's not going to be some kind of esoteric asset class. We're going to do a lot of work to learn. And then by investing with syndicators like myself, you lean on them to understand why they chose this property, why they underwrote the deal the way they did, what the risk profile looks like, what the pros and cons are, et cetera. I mean, part of our job as a GP sponsor is to help educate people and give them resources. So that's the way I would look at it. If you really are struggling, you're not accredited, you don't have a lot to allocate, there are some great crowdfunding websites out there that you can access that, the quality of the sponsorship might be a little bit different, but it'll still give you access to these type of deals. And they also have a huge amount of resources where you can learn, God, as much time as you want to give to them.
Mm-hmm. I think one of the things that people that want to get invested in real estate, they see stuff on TV. Like I'm going to talk about like the flip or flop shows, the home renovation shows, where it's like the deal is like there's like high flying, like crazy phone calls, and like it's always like all this activity, and then you're trying to like squeeze everything out and make the deal work and flip it. But I would say most real estate deals are actually fairly boring transactions, in the sense of like you're looking at hundreds of deals to make a few work, and most don't work. I mean, some are just like, hey, that's not going to work. It's going to be a real quick look and say no. But others is like, like, hey, what are the fundamentals? The income is coming at this, or expenses are that. This is what the taxes are going to be, and blah blah blah. The calculation, say you want a 6% or 8% cap rate return, just tells you like, hey, this is what we can pay for it. And does that number line up with the number that it's being offered at, or is there some value add? And a lot of the times that answer is no, or it's, going into negotiations with somebody hoping that they're going to understand that the offer is going to come in significantly less than what they're doing, or somebody else is going to say, hey, look, I'm willing to accept a lower rate of return and pay a higher price for the property and see what it is. So what do you think is, your experience with the number of deals you're looking at and how that activity level course correlates to actually finding a deal that works?
Yeah, I mean, we could throw a bunch of numbers out there about my funnel and how many deals I look at. I mean, you can put out some big numbers there, but I think, after doing this for 10 years and after making 35 acquisitions or something along those lines, um, it's really not a function of how many deals you look at, it's the quality of those deals, right? And for us, establishing that brand, having that credibility, getting off market looks from leasing brokers that we've done a number of transactions with, I think that's where, as an investor, that's part of the fee you're paying me, is access to
Mhm.
those type of opportunities. Because frankly, buying a, $20 million class A office building in a great part of Kansas City, most individuals just don't have the capacity to take that deal down themselves, and they just will never have the opportunity to see it unless they go through an organization like mine. And
Mhm.
so I don't know if it would necessarily be, I would be so transfixed on kind of the number of things that we look at. But at this point, we have a pretty good idea of what we like and what we don't like, what we worry about, what we don't worry about. And having that kind of specificity, I think, matters a lot more after doing this for 10 years than it is a function of how many cold calls I make to brokers.
Yeah. And you touch on something right there is having relationships to get off market looks. You're talking about getting deals your way that aren't necessarily on the market, but that doesn't happen overnight. How did you go about building key relationships with um, people in your industry, in local to the market you're in, or then you're also talking about being outside of your market, like local driving market. Like, how do you build those relationships and you know capitalize on those?
Yeah, there's no secret sauce. So whatever cliche you want to throw out there, burning shoe leather, pounding the pavement, whatever. Pre-COVID, I was taking between 100 and 150 flights a year on average, and hotel stays probably 30 to 40 nights a year. So most of it, honestly, is drinking beer with leasing brokers and talking about college football and college basketball. No joke. So in the Southeast and the Midwest, it's SEC and Big 10, Big 12 country. That's what these guys want to talk about. And if you do a good job of becoming a friend with them, you get an off market look. You don't retrade on the deal. You're a gentleman on the transaction. The seller gets paid. You pay everyone's fees. It's a clean deal. You will start getting off market looks there. I mean, it's just how this works. But the first time you do something in a new market, you plant that flag, you have to be very careful because, when you're talking about even these bigger MSAs of, 1 million, 2 million people, if you're buying a $20 million office building in this market, every capital markets and leasing broker knows about it. I mean,
Mhm.
these people are worse than like a knitting circle. And so you have to behave appropriately. Otherwise, your brand and your image will be tarnished forever. And so I
Yeah.
think that's the bigger key. And once you get there, you start getting this network effect of, well, I've got a buddy in XYZ market. I think you should talk to them. They've got something that sounds like it might be a fit. And then you kind of go from there. But at this point, we have acquisitions associates who are dedicated to just calling brokers all the time, telling them what we're doing. And I always tell people all the time, if you want to come work for me and you think you're going to be on the buy side, you better go look for a different job because we are on the sell side. We're selling ourselves and the company to brokers and to investors all day, every day, because that's how you find deal flow.
Yeah, I think that that's something that gets overlooked a lot of times. When we're out there selling, we're networking, we're selling ourselves, we're selling our reputation, we're selling the company's trust. You talked a little bit about retrade. Maybe you can explain to some of the audience that doesn't know what a retrade is and what
Yep.
it means to be a gentleman on the other side. But I'm also curious about how long did it take you to start building these relationships? You said you're 10 years, and it doesn't happen overnight. Like, how does somebody kind of break into this very exclusive, very small club of real estate professionals?
Yeah. So I'll answer your first question. A retrade is when I am under contract to buy a property for $100, then that's the negotiated price. We signed an LOI, we signed a purchase and sale agreement. I've gone hard on my earnest money, and we are 2 weeks out from closing. So everyone's excited. We're pushing forward. We're just papering the deal. Kumbaya, the broker's going to get paid. The seller's going to get his money. I'm going to get the deal. My investors are going to be happy. And, typically 2 weeks out from the deal closing, I go to the seller and I say, I'm going to need a 10% price reduction. Sorry. And you can come up with any kind of number of excuses or reasons about it, but it is what it is. If you want to close in 2 weeks, we're ready to go, but it's going to need to be 10% less. That's
Hmm.
a retrade. And that is a New York Wall Street style of transaction where, to use some Wall Street jargon, you're already pregnant on the deal. Everyone's excited. You're almost at the finish line. The seller's going to be upset, but they'll probably go for it depending. And you can do that once, right? Maybe. But everyone in town, if you go to a place like Kansas City or Nashville, etc., places that we do business, Richmond, Virginia, everyone knows what you did. And,
Hmm.
sellers and brokers are sensitive to that. So that's a retrade. To answer your second question about kind of how you get into the game, you've got to call in some favors and use your network and leverage shows like yours and other resources that you can. But you've got to put yourself out there and get outside of your comfort zone, probably is kind of the best way that I would put it, because everybody's going to tell you you're crazy. This idea doesn't make any sense. You're going to be a failure. It's never going to happen. And you just got to sell through all that noise and just one deal at a time. I mean,
Hmm.
this business is full of cliches, but I think it's for a reason. I mean, how do you eat an 800-pound elephant? You just got to take one small deal at a time and keep building progressively. And if you keep your head down, you're consistent, it will happen, but it just takes a lot of work.
Yeah, I think you talking about your reputation goes a long ways. And on the flip side, if you have a good reputation and you're in a competitive market, you're bidding against other people for the same piece of property. If a seller knows that like you're going to not re-rack them, you're not going to, you're going to be fair, you're going to close the deal, you have the capital, you have a good reputation, they may even take a lower offer than somebody with a higher offer that doesn't have quite the reputation. That happens quite often and not. And real estate can be done very, there's a lot of fluidity in how the deal could be structured. Like it's not just the overall price, but like how quickly can you close? Is it a cash only transaction? Those things uh, tend to make deals more attractive to sellers and buyers if you have that reputation. So I would definitely agree that you have to focus on building that reputation. That's really what's going to get you in the door. And it's such a small industry. Like it can very well, you treat somebody bad on one side of the table one time, 3 or 5 years later, they might be working at the company that you're doing business with, and all of a sudden, like your relationship soured because that somebody else came in that you didn't treat right. So I definitely agree that the reputation is everything. Um, Moving into the next question, I wanted to ask you, what does it mean to you to be all in?
Mm. So when I started my business, I had just left my law practice, and I remember it vividly. It was Masters weekend. It was Easter weekend. It was one of those weird things where it fell on the same weekend. My son was 3 months old, my firstborn, and it was do or die. Real estate had been a side hustle for me, something that I liked, but I was also practicing law. I was in a situation where I needed to make it work. And I remember, you know, crying in my beer watching the Masters on Saturday. Sunday I woke up and it was game time. And
Mm-hmm.
that's like my burn the ship, crossing the Rubicon moment where I was all in and dedicated. It was the only thing that I was doing. And that's when I started experiencing a lot more success. So, I'm not sure if that answers the question about what it means to be all in, or how but that was the moment that I knew personally.
Mm-hmm. Yeah, and that's really what I'm looking to get is your definition of how what it means to you and how it applied to you. And I think, kind of dabbling here, dabbling there. If you want to have true success, you're going to have to focus on that one thing.
And
So
to go back to your earlier point, I just want to marry the two concepts. I think it's you have to be all in if it's going to work. And I talk to young sponsors and GPs or entrepreneurs that want to be in our business, and they ask that same question you asked, right? Like, how do I do this? There's a reason there's not a playbook, and there's a reason it's really hard. And I was when I was young, I got really frustrated by this. I just wanted it to happen and like turn the key. But you don't get good at your job in this business unless you go out and you get the no's, unless you go out and you don't win the deals, unless you go out and you try to find those brokers. I mean, there is a reason that it takes this type of process and time to get to a point where you're a sponsor running X amount of AUM. It's just part of this whole ecosystem.
yeah, it's so true. And I think your experience, it doesn't happen overnight, but there's so many variables. Like if you read a book on real estate investing, it's usually feels like it's just income divided by expenses and if it works or not. But there's so many knobs you can turn and dials you can turn that like you go, well, what if my interest rate goes down a little bit? Or what if my taxes are just a little bit off? Or what if I think my property management fees are, just a slight amount? Or what if construction costs go up? Or what if construction costs go down? Or what if I have to do renovations? Or what is the best way to improve the property? A lot of times it's not a straight transaction. Is you go like, hey, can we buy the property at this, invest this much money, increase the returns that the rents that come in for this property, and then it makes the property more valuable. And there's like so many ways of re-looking at the property. You don't get that experience on one deal. It takes like time and time again. It takes the no's. Hey, well, how did somebody else look at the deal to make it work that you didn't think about? And can you think about it that way next time? Or what did you make a mistake on? And these mistakes you can make can be pretty painful too, right? I mean, have you had some experiences with failure there?
Oh yeah, I've had my teeth kicked in a lot. Um, Not so much on the deal side, thankfully. There have certainly been one or two that have knocked on my way. We did a development deal, an urban infill deal in Nashville that just didn't work because we underappreciated the zoning and the codes and the local political element, which I would never do again. And then I've got a deal right now that is struggling. It's a retail restaurant in Louisville that they went bankrupt, right? I mean, it's just not a good time to be in that business. So continue to learn. More of the mistakes have been from the fact that, and I think this is really important for your listeners who are aspiring entrepreneurs or maybe investors who are interested in talking to sponsors. There are two main risks that you take in this business. And I didn't appreciate this fact when I first got into it. It took me a couple of years of the hard way. You got the real estate deals yourself, which you were talking about, which is, the underwriting has to be right. You have to buy it at the right price. You have to have the right plan, the right partners, all of that. That's a lot of work. It's hard. There's this whole other side of it where you're also running a small business. You're dealing with tax, audit, HR, investor relations, reporting, etc. And it almost is irrelevant what product offering or service you're providing. You're running a small business, and small businesses have a tendency to fail in America. The numbers are not good. So you're taking a double risk of knowing what you're doing on the real estate side, but also knowing what you're doing as a small business owner. And I think it's really underappreciated for a lot of sponsors and entrepreneurs, and it certainly was for me. And I made a whole host of mistakes on that front because I didn't put enough time and resources into the small business component. And I thought of myself as the deal guy. And that was a big mistake. And I think part of the kind of hero mentality that we have in our industry oftentimes, that it's only about the deal, when in reality, it's only part of the story. It's only part of being in our business.
That's so true. If you're not managing the day-to-day of your small business and you run out of cash, like it doesn't matter what deals you have if you can't keep the doors open. So I appreciate that insight. We'll talk a little bit about who you're looking to get connected with. And you talked about you're on the buy side, but you're also selling yourself. Or talk about who you really are looking to make relationships and connect with.
Yeah. So we only work with what I call non-taxable, excuse me, we only work with non-institutional investors. So in my world, there's taxable and non-taxable. We only work with individuals and family offices and private wealth management firms, so taxable investors. I'd say profile-wise, the 80-20 rule definitely applies in terms of 80% of our investors are individuals. and 20% are probably family offices and RIAs, etc. But anyone who is looking to be a passive investor, they want a good place to park their capital long term that's uncorrelated with the market, and they really want somebody who's going to be focused on taking advantage of all the tax benefits that come from direct real estate ownership. That's the profile for us.
Okay, awesome stuff. And where can people go if they want to get connected with you?
Yeah, so I'm very active on LinkedIn. You just look me up, Brian Adams, Excelsior Capital. You can go check out our website, Excelsior Capital GP. We have a lot of resources on there, and we put out kind of a monthly newsletter, and we have a distribution list, obviously, where we send investment opportunities on a deal by deal basis to our network.
Awesome. Well, I encourage anybody that's listening that's got questions about real estate to reach out to Brian. And if you do have a conversation with him, let him know you heard about him on the All In podcast with Nate Pale. Thank you, Brian, for your time and coming in here and chatting a little bit about real estate. Appreciate it.
Yeah, thanks for having me, Nate. It was fun.
Take care.